Hello traders, Gary Wagner here. It is 12:15 in Honolulu, 6:15 in New York on Tuesday, 30th day of July, 2024, and this is the evening report for gold and silver. Traders, there was a notable uptick in gold pricing as it rallied today, and that reflected the optimism about the announcement of a potential interest rate cut by the Federal Reserve later this year. Gold climbed over a full percent in trading in New York, 1.09%. That's a net gain of $26.40, taking the most active December contract to $2,451.90. We did send out a trade alert this morning. We'll cover that when we pull up a couple of charts. Silver had a strong performance today, gaining over 2%, taking the most active September contract to $28.51.5. While there was fractional dollar weakness, the dollar declined by 0.09%. It really wasn't enough to have a profound impact on either gold or silver. The vast, overwhelming majority of gains in both precious metals are the direct result of traders bidding those precious metals higher. The dollar index is currently fixed at 104.245. The trade alert that we sent out this morning is under the assumption that we have completed the correction from 25.25. This, of course, is looking at December gold down to the lows at 2,400. This was almost a 78% retracement from the rally, which began just below 2,400 up to the top at 2,530. So it is a deep but acceptable corrective level. We believe that if we have entered a third wave, there is a ton of room to the upside in terms of where gold will inevitably move to, but it won't happen in one parabolic move. The first bullish wave count that began back in February, moving gold from about 2,000 to its peak at approximately 2,500 and change, and then the correction that followed. This is our wave one, and the first thing we did is a basic Fibonacci retracement starting at this low, moving to the conclusion. And as you can see, a 78% Fib retracement is just below the low that came in a few days ago. So as I said, it is deep but acceptable. Now that the market has moved substantially off of that price point, we can say with some certainty that the correction has concluded and a new motive phase or impulse wave, wave 3, has begun. And to that end, we want to plot where we believe this wave could terminate. And to do that, we've created a Fibonacci extension. We measure this wave 1 and begin our extension from this low here, just at about 2,400. Since wave 3 cannot be the shortest, the first level we would look at would be at $2,580, 2,600, and then close to 2,700. But regardless of where gold heads, it's not going to do it in one parabolic move. And what I mean is that this wave 3 will be further subdivided one level down, and we would get something like, and this is just figuratively speaking, not real numbers, but a wave 1, a wave 2, wave 3, a 4, and then a concluding fifth wave. Therefore, on this particular trade, we want to target where we think this subcount, wave 1 of wave 3, could terminate. We are looking at a 15-minute Japanese candlestick chart of December gold, and we have our entry points, our stops, and I want to discuss our exit strategy or upside target should gold continue to move higher in our anticipated direction. First, this morning, we sent out a trade alert to buy December gold at the market. Gold was trading at $24.29, and it was on this candle right here that we actually issued the trade alert. The market did, in fact, move higher from that point, but initially we placed a good till canceled stop at $2,418. The rationale behind putting our stop there was it was putting it below these real bodies that represented the lowest trading values that occurred yesterday. However, as the market began to gain momentum and move past our entry price, we sent out a second trade alert to cancel and replace or raise our stop to $2,434. It is based on this particular price point here. And as you know, gold continued to move higher, currently at $2,454. Our initial strategy is if gold continues to move to higher values following the conclusion of the FOMC meeting tomorrow, the press conference, and the statement, we believe that gold could initially head to anywhere between $2,460 and $2,490, which is our current exit strategy. Therefore, traders, maintain your current long December gold, maintain your current stop. We will send out the next trade recommendation tomorrow after we see the reaction in gold pricing to the conclusion of this month's FOMC meeting. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.